Well, how's it going, folks? It's midweek update time. It's August 24th. Joe with you here, finishing out the end of the summer, going into September. I think Rob made mention of it on Sunday's class. He said, hey, August is over. And I'm like, well, we still got a couple of weeks left, but technically it is because the expiration cycle's out. And September, going into fall, things can change as we get into another quarter, or we get out of, I should say, the summer into the fall, looking forward to earnings. People go back to work. Well, technically, I'm not sure if that's true anymore with the way that the world's been over the last couple of years, but usually kids are back in school, kids go back to college, people bear down and start to work a little bit more, so on and so forth. So let's see if that's going to have an impact on the market. So far, it has had a little bit of corrective action, which I'm going to talk about. Now, guys, this is my opinion. I gave you a massive opinion last week. I said we were due for a correction, and we got it. I just didn't think it would be as quick and as aggressive as it was. It kind of takes away from being able to trade it. Anyways, this is my opinion. It's just what it is. Take responsibility for the outcome. You guys get it. Okay, so the corrective action came hard and fast. As with all moves, it was almost kind of set up. I think Corey made a really good point on yesterday's update that everybody was looking at that weekly chart, looking at that resistance at the 20 or the 50-day moving average, and that we're in just a big bear rally. I mean, it seemed to be everywhere. So once everybody expects something to happen, it almost is predetermined to, because we make it happen, if that makes sense. I know that's kind of a deep thought, but take it for what you will. It is that. So the corrective action, it came hard and fast. Friday looked like it was slipping, and Monday, boom, right back down to the August support levels actually set previously before we retested them, climbing back up in early June. Energy, however, didn't go anywhere but up. So that is, to me personally, is just a renowned sound of fear, a renowned sound of slowdown. Yes, the markets came off the bottom pretty great, but are we out of the woods? You know, based on what's going on with energy and based on the reaction to any sort of resistance, this is kind of a technical thing. I'd say we're a little skittish. So sentiment is bullish, maybe overconfident. Why did I say overconfident? Well, we came off these levels pretty aggressively. We staged, went higher, got up to resistance, and then stopped. So, yeah, we were super bullish and super confident. However, we got the Fed still hawkish, still saying, no. What we're seeing in some of the data is good. Some of it's bad. In fact, I put all over the place because that manufacturing number, I've never seen negative 31. I had to check 3 places because I thought it was a misprint. I thought it was a mistake, but that is huge. And then we come out a little bit decent on home sales. I'll get to the numbers here in a second. I shouldn't say decent, but less of a drop, so on and so forth. You know, things like that nature. But is this just a reaction of investors thinking that, hey, I'm over it, I think the markets will be fine? Or is it a realization that now that we're up here, the Fed's not willing to slow down, because the Fed doesn't react to the markets, it reacts to the economy? Still a disconnect. All right, let's get off my soapbox and take a look at a couple of great trades you guys have been looking at. This is from last week. Tesla, Boeing, and General Mills actually came from Sunday's room, but I have had talked with a few of you previous to that and yesterday, actually 2 days ago, and these are really good trades. I thought I'd share them as well. P10, I like that on the sideways trade. It's still within the range talked about on Sunday's class, but I did move AT&T from neutral down to bearish because it just has a pretty cool setup. That's one of the 3 that we'll take a look at. So let's jump into our charts. The first one is Tesla. Now it's got its own worries and news. I guess Twitter came out and said that there was some sort of scandal when it comes to the buyout, blah, blah. That's affecting Twitter. It's not affecting Tesla. As I grab my pin here, we have a pretty good high base area and a I should say highs and lows where it can consolidate. Now, these were all the way back from April and into early May. If you guys want to get a little bit more technical with this, you could actually slant this into a tightening or symmetrical triangle, and this is actually really perfect behavior because the volume is decreasing. So it's pinching, it's above its moving averages. Real easy, guys. Whenever I look at a symmetrical triangle pattern, I look at the trend that it came from, and I take a look at where it correlates to its moving averages, in this case the 20 and the 50. Since they're all above, I'm going to lean for a bullish breakout. Yeah, I know. It's genius, right? I should write a book, and whatever. Or you can be patient, wait for this thing to get up to the top line that we drew earlier here, up at the just below the 950, and play it as an ascending triangle breakout on the longer term. I'm totally fine with either one. That's great. Now that's if you're bullish. I've got a lot of opinion over the last couple of weeks on these markets should correct. It was a little bit of an overblown bounce. We still have a whole long road ahead of us, and I agree with both sides, bull and bear. I just have to trade the markets in front of us. So, good setup, good opportunity moving to the bull side if that's something you guys are interested in. Boeing was awesome, and I just really wanted to bring this up because I loved how Rob said, wait for the bull pullback. It was really cool. He liked the setup. He liked everything about it. And he goes, hey, just wait for the bull pullback. Now, I believe he was talking about it here. That's Friday's candle. Drew a line at a support level, and take a look. We did get that horrible gap that all the markets did on Monday. But look at that. We confirmed a bull pullback. So overall, still viable bullish trade. And I do like it. Most of the reason I brought it up is because I do like how this kind of outperforms when it comes to it's more of a defensive play. It can be, which is interesting because this is super impacted by oil prices, gas prices, energy. You got a lot of airlines that are going to retract. They're not going to go out and buy brand new planes. But for some reason, I guess it's aerospace and defense. I guess the government contracts carry it forward. However, I just like the pattern, and I thought I'd give a nod to it because it looks really good. So let's get to our last bull here, if I can get to it, and it is General Mills. And it's an ascending triangle pattern, plain and simple. We did have a little bit of a resistance level. Oh, set. That's not the right button. Here we go. There we go. Just above 76. But I do like the ascending triangle that is kind of setting up above the 78. If you don't expect a huge breakout, something like this, I wouldn't as well. Maybe a slow march up to 80. Diagonal spread it. Something sideways to up. Things of that nature. So there is General Mills. Moving on to our sideways trade, P10. And I'll just go ahead and draw pretty much what we were discussing this on Sunday is these resistance levels, 17 down to 14. You can see all the way back to early May that supports there. And even with this gap up in energy, once again, folks, is on fire. It's the strongest sector. I'll show you a chart here in a second. It's still below that 17 mark. For you Condor guys, you're doing great. And it's still well within that range. I'm not sure how much you're going to get paid for it because it is so seems to be a little bit lower on the volatility side. However, it's a pretty good probability. I like it. So let's move on to the bear side, and these bears have been bears for a while. They have been up on our charts, except for AT&T, but ABBV has been so many times, bear this, bear, and it's worked out. And here we are once again in a great situation, I truly think, with a nice, boy, what do we call this? Let's draw it. The support that is set early August as it started to fall. Now, we do have a lower target. This chart's a little bit more zoomed out than most of my charts. And the reason being is because I really wanted you guys to kind of focus on this area. And then, got to cast your eyes back to this area. Yes, that's right, folks. That's early, the beginning of the year. But it's still relevant. These are our targets. So 135 would be the first stage target. No problem there. And then 130 for an extended target. If you truly believe that these markets have to do a little bit more correcting before we can actually come out of these, get ahead of itself and start to move higher. So we'll see. But I do like it. It's been a great chart. And for a lot of my traders that have been trading it on the bear side, they've done really well. Here's another opportunity. AT&T, you guys can see that I did have this on this sideways. And the sideways I was playing was these gaps. The gap that it had early April. And retested end of April and mid-June. I thought it was cool. Then it gapped right down to it, and it hasn't been able to get above it since. So my idea was somewhere between here and here, right? Where it gapped from, where it gapped to, and it's got this beautiful little range going. It dipped below a little bit. Looked like it was about to save itself, but now, folks, we are below a pretty significant support level. Let's draw that line at about 18. I'll make it nice and thick. So a little bit more ominous. Yes, I'm making lots of lines today. But this is a little bit more ominous than I've seen it in the last month. So it's off the table for me on sideways. I'm looking for something a little bit more to the downside. Short-term target, pretty obvious, 17.5. So this is more of a diagonal spread or a really tight vertical. All right. I did want to make mention of Corey's Johnson & Johnson. I'm just going to call it Corey's Johnson & Johnson because I came across it on yesterday's end of day, and it's neat. This is a really good one. Sloping a little bit lower. We know that the sector is a little bit tumultuous lately, to say the least. ABB is one that we like to slam on. Well, here's Johnson & Johnson. You can see that it had broken a support. Let me make that a little thicker. At about the 170 mark after it had that pivot point here in June. Now it looks like it's trying to set some support here around the 165. I zoomed this out so I could see further back earlier in the year, and I didn't see anything significant except for maybe a big old fat target here the end of February. What do we want to call that? 157.5? Let's carry a line over there. Much easier to draw lines. That's a little ambitious. But if it continues to play this role where it likes to go down and bounce up, and that's $5. $5 here, $5 back. $5 down, $5 back. So 160 shorter term target on the bear side might make more sense. Yep. All right, so that's what I've got around the board, around the horn with Maverick. Let's get into some market analysis, and this is going to be pretty obvious because we're just in that very aggressive correction. You guys can see over here on the right there, we've got the Dow, the SPY, and the Qs. They're down a lot. I mean, today, as I've been talking, I haven't checked it, but we were having a pretty significant move to the upside today. But coming off of Friday and Monday's moves, even Tuesday on the diamonds was looking really ominous. We'll get to the chart in a second. So we are overall, even with the move up, at the last time I checked, just shy of 2% on the Dow, the SPY, just over 2% on the Qs. The Russell's holding in a little bit, just shy of 1% to the downside. Energy, oil, doing well, up 3. Gold, pretty much flat. So let's just jump into the chart and let's talk about the specifics. So what I was thinking is, I think the most important thing is if we hold this support here at the 410, and I'm going to want the daily chart because the weekly chart, I truly believe the whole world has seen it, and the expectations of a pull, a bounce or a move lower was super high. In fact, folks, my last class, I absolutely called it. I didn't call it. I just said, look, this is speculation. We're due for corrective action. And it happened. Now, we're still in the midst of it, but if this holds, look what we did back here in the end of May into June. It was a pretty significant area, and that was after a horrible, or just previous to a horrible CPI number, unexpected. Oh, inflation still right on top of us. We have not even come close to getting out of it. Well, here we climb back up. We got another CPI number that was actually a little better, and we're right back to where we started. So I have to treat this as a bull pullback in the shorter term, at least on the daily chart. If we can't hold this 410 level, I think we're in for a little bit more significant of a move than just the next level. 400, 390, so on and so forth. I think there's going to be something a little bit more aggressive bearishly. Once again, I love having an opinion. So that's the SPY. Let's get to the diamonds because it's the exact same thing, but it looked to me a little bit more aggressive. You could see that we had Monday and then Tuesday. Oh, geez, we're already threatening that same level. You could see back here. Here's the range that I'm talking about. And by Monday, we were well into that range. And, well, I guess we really weren't threatening the lower end of it. But we're still in the mid area. We could see a little bit more sideways the rest of the week. We got a couple things to talk about economic-wise. We do have the Jackson Hole Summit. We do have a Fed that came out and said they were hawkish. And we have that PCE number, right? That's the one that the Fed likes to look at coming out on Friday. In fact, we got a bunch of stuff coming out on Friday. Let's look at the Qs. Same idea, same story. I could draw the same lines. I'm not going to. Let's just get through because I want to look at some of the trades you're looking at. But it's the same idea. This one's a little bit more, oh, fine, I'll draw one line. You talked me into it. It's a little bit stronger in the fact that it is above most of these areas. This is that range I referred to. This is that August consolidation that was supposed to be the same as what we saw here in May and June. And guess what? Look, it didn't. The NASDAQ went straight up. It didn't consolidate. It just went straight up. So this is definitely outperforming and showing a little bit more resilience at the level it's at. Okay, so jumping into the economic reports. Chicago Fed National Activity Index. When you're expected, it was at negative 0.25, and it comes in at plus 0.27. That's a pretty good wax and wane or push-pull, kind of a rubber band theory. It was down here. Here we come again. It snapped back. I expect it to be somewhere to the downside next time. I can't get a lot out of these numbers lately. Now, when I see some of the stuff that we saw yesterday with the services PMI, manufacturing PMI, they're not too far off. The expectations is what causes a reaction. And let me go ahead and start to draw. This is previous. This is the number we know. And the expectations, in this case, show a slowdown. 5.2, 0.2, 5.1, 0.9. Okay, it's supposed to slow down. And it did, but a little bit slower than expected. When these two numbers are off, that's where you get a market reaction. It's usually the expectations and then, oh my gosh, we just hit left field. Now, we had that. We had that with that manufacturing number last week. Way bad. And the market's kind of shrugged it off. I thought that was pretty interesting. So, moving forward, we've got the PMI. This is 49. It came in a little weaker. That shows contraction. New home sales, 585, expected to go to 574, which is decreasing, and it went from 585 actually down to 511. So falling a little bit faster than expected. I don't see that number being reacted to because that's why we raise interest rates, is because we're trying to slow down a super, super hot home sales number. So the markets react to it? No, not really. Not really. Kind of sideways day yesterday. Here we are today. Durable orders at a plus 2.2. We expected a 0.1. It came in flat, weaker than expected. Now, we're going in the right direction when it comes to curbing inflation and growth. But if we go too fast, it can create its own problems. So here's the pending home sales number. Huge drop. Huge drop in that. We expect a little bit less of a drop, and we did. A lot less than that. So this one's got a kind of a softer landing going on. Now, guys, I know I'm explaining a lot of stuff that probably isn't that important, but I'm just watching the reaction that these markets have because that's a way to gauge sentiment. So what do we got left? Quite a bit. So jobless claims, I think, is going to be, I think it's going to be right in line. I don't think it's going to be too big of a deal. I truly believe people are going to be focusing on that summit. Down here at the bottom there, you can see Fed Powell talks about, he's going to talk about what he's going to talk about, what he sees, so on and so forth. And the PCE number, that price index, the PCE number is something that's been really touted or talked about lately because that's a real big indicator of how hawkish or dovish the Fed gets. Notice that there's 3 or 4 different parts to it. So we'll see how that comes out on Friday. More importantly, how the markets react, so on and so forth. That's enough of that. Okay, let's poll the class and find out where you guys are standing. Market Outlook. Go ahead and launch this bad boy. And tell me how you guys feel. Yes, here it is. Here's the poll right here. You guys can look at it. Actually, you know what? I'm going to give you the poll in progress. There it goes. Nice. So the outlook over the last couple of days, and it was very interesting. Corey's a little bit on the bear side. He's taking a look at the bigger motion of the ocean on the weekly side. Darren and Rob had their reservations on Sunday as well, and I'm going to have to agree, without showing too much of my hand, that there might be a little bit more there, especially technically. I mean, we're not back to the point to where people are, they have money and they're buying Peloton bikes, right, online, even though Peloton did have a pretty good jump today. But we just don't have that disposable income, or we're not supposed to. Moving forward, if things heat up, jobs losses, not so much. I did see Ford was actually going to reduce some, slower down some of the factories or lay some people off based on the price of their EV vehicles. That's right, I'm doing air quotes, but we'll see. That has to actually spill over to where it impacts us day to day. Cool. So 95% voted. You guys see we're about just over a minute into it. I think that's enough. Let's go ahead and close the poll, and I'll share it. And as you guys can see, we are definitely -1. 61% -1, 33% 0, 28% +1. We are definitely sideways to -1. Thanks, guys. Appreciate that. Now let me get rid of it so you don't have to look at it anymore. And I'm pretty much in line with you guys. Now we have the moving averages still sloping up. I was looking at that 20-day, and I'm like, that might be sideways. I'm going to call it a slope up. I'll be glass half full. But we're at a support level. So short term, I'm 0. Long term, I have to be +1, and the reason being is because we are still setting a higher low. We're retesting support from a higher high, period. So I've got to trade the markets in front of me. So I'm a -1 with you guys on the shorter term, although I said 0 because I'm giving you my top down, but +1 on the long term. If this holds, we can move higher. Definitely. All right, enough of that. Let's move on to our sectors, and then we'll go out and take a look at some of the trades that you guys are looking at. So our weekly performance here, energy, alarmingly strong, 6% for the week. I took this earlier this morning. That might have changed. Real estate and communication services were going back and forth when I was looking at this. Looks like the communication services edged out at 4.25% to the downside. Whenever I see energy spike like that, it's usually a flight to safety. There's an unseen fear because I'm a huge VIX guy. I like to follow it, but I'm not seeing anything, no reads from that as well. So economic-wise, I like to look at those. These numbers are all over the place. VIX-wise, it spikes, comes back, it's staying relatively low. But when I see kind of the reading of the tea leaves, 6% the moved energy, that's panic. But it's only a few days, right? It's only been a few days. So we'll see if we can sustain this level. It might change my mind. Energy, straight up. Didn't even hesitate. Came up to a resistance level. I'll go ahead and draw some lines because you know me. I like lines. I liked the ascending triangle pattern that it had right through here up to 80 and just stayed above it and popped up the last few days as the markets popped down. Now it is above areas that it set, 2 areas, almost 3, in April and into May. So when it had this nice little march up to its peak, it's breaking these levels. I don't want to say effortlessly, but they're there. So if this stays high, I think that's kind of an alarmist reaction. Look at the volume. I mean, I guess it's nothing like it was back in here, but it's pretty consistent to the bull side. So flight to safety, I couldn't call it that, but definitely pro energy. How's that? All right, let's move over to the bear side. This is the consumer cyclicals, consumer services, excuse me, communication services. Once again, we did hit a good resistance here at about 60. You could see it was almost an area of support set back in late April. This is filled with a few stocks like AT&T, I imagine, that just aren't doing well. They're falling out of favor. The growth stocks, the speculative stocks, things where it's like, hey, if you want to invest into a quote unquote future that we don't know about, this is the one to jump into. So they're kind of falling apart. It's still holding on there pretty good around the 56 mark. It really is. And today it looks pretty decent, but definitely out of favor. All right, let's get into our conclusion. So these levels need to hold to continue a bull move. That's right, I said it. We've had bull moves for the last month and a half or so, and higher highs, higher lows. This one is a big one. I believe because there's that weekly chart a lot of people are talking about. We don't really have anything to help us when it comes to earnings or companies making tons of money or positive announcements. We have a Fed that we know is already hawkish. We know interest rates need to be curbed. We know we're way out of control in that area. So it's got to hold just on faith. I don't know how it's going to, but we'll see. So we'll see if it's going to continue a longer-term bearish trend into the fall or not moving forward. So bullish for now, but based on Monday's action, still skittish, and I'm just going to call it that. I I truly believe there's a lot of people putting money in these markets off that bottom, and it's great. They're doing awesome. But we got up to a level now, and based on the fact that Friday closed, and then we could just jump out on a Monday, still shows we're skittish. PCE numbers could cause reaction on Friday, along with a bunch of those numbers, the ones that we took a look at. But don't base a trade on it. Let's see what happens. Jerome Powell will definitely speak at Jackson Hole Retreat, and we'll for sure get updates as that goes. All right, enough. Let's go out. Let's look at the markets. I've got, yeah, a few. Okay, let me put this up here. And that's not what we want to look at. We want to look at the Finviz. There it is. Sorry, folks. Took me a minute there. Brain fart. Okay. Up at the top, Neil. Thanks for starting out. He's got Roku. We've got FUTU. Okay. All right, let's take a look at both those. Let's start at Roku. ROKU is the ticker symbol. This one's been beaten down a little bit. I haven't seen it in a little while. I know a lot of the stocks have. I am very slow. Sorry, I'm bogging down here. Okay, let me zoom in. We're looking at a 60, 65, 70 put butterfly for the 2nd of September. I like it. I like it. 60, 65, right at that base, I imagine, 70. Okay, I like it. I like it a lot, Neil. Cool. Nice. Playing the side down move. Something that's beat down. This one feels overextended, doesn't it, because of the last few days. But, boy, if the markets can continue just base here or even roll over a little bit, this is in the correct sector and one that's been a little bit beat down. Boy, I like that one. Thanks. Okay, FUTU. This was one that I was looking at today because it was on, I believe, Sunday's class. If not, I think Corey was talking about it. And the only reason I didn't say anything about it is because it had today's candle. Just a little bit of a blip up. That's fine. That's fine. Doesn't mean that it's not a tradable trade. Neil's got a 35 targeted butterfly, 5 strikes. So let's go to it. 30, 35, 40. It's still very feasible. Absolutely. I like this area here where you can see we hit some resistance areas. For sure. Yep. I like it. Today's candle upsetting, but still, this could turn all the way back down. It could come back up and set another hammer or doji here, and we're right back into business. So I'm fine with that. And that's the only reason I kept it off the watch list. Really. I had a bunch to choose from, and I just kind of set this aside. It's still doable. It's just I thought the other ones that I had were a little bit better. No big deal. Thanks, Neil. Okay. Okay, John's first time here. Okay, John is trying to type a trade in for the first time, and folks, I've been trying to learn how to read as fast as I can, and I miss a lot of stuff. This is a tough class to teach when people are typing in paragraphs, but I appreciate it. John, breaking over resistance, put on a September 9th, 35-38 bull call spread. Let's take a look at it. And great work, buddy. You typed it in perfectly. Thank you. All right, let's see. 35, right where it's at, and a 38. I like it. Very nice. You've got this area up in here, which is cool. These could come up short if it hits 37.50, 37.75. That's fine. But a 35.38 makes complete sense. Let me roll down to my calendar here. The 9th, which is 2.5 weeks, right? There is still the 31st is Wednesday. Wow, can you believe that? So we got a few days left in August. The 2nd of September is that first Friday, and then the 9th, so 2.5 weeks from today. I like this one, John. Thanks, man. Let me write it down. Okay. James, CMI. Okay. I haven't looked at these guys for a while. Usually I'm a John Deere guy, right? But, okay. Cummings has got a target of 236 butterfly, waiting for confirmation. Okay. 236, so definitely targeting just above this area. I might be better if I zoom out. Yeah. There we go. Now I get my pen. 236, right above here. Okay. Cool. Targeted butterfly, waiting for confirmation. Let me read that again. Yes, waiting for confirmation. So I would assume James is waiting for the confirmation of a pivot point here, whether across this high or the previous day's high. That's fine. Confirm the bull pullback with a pivot with a target of 236. Like it. I'm going to put that as bull because it's a targeted bull. All right, he's got one or two more. Let's see. Bears, BX. Waiting, targeting 90, 93. 90 or 93 with a butterfly. He hasn't decided yet. Waiting. This needs to roll over, right? 90 is a real easy target there. Excuse me, guys. Let me go ahead and erase that and zoom in. I like it. When you guys are actually, if anybody's watching this from their phone, it makes a huge difference when I zoom in on the chart. Okay. Let's see. 90 or 93 with the butterfly. Okay. I like the 90 target. I do. I mean, you can always shorten it up if you want. 90. Wow, 95 is a solid one. By the time it rolls over, if you're trying to enter this at 100 or breakdown of 100, but 95 is pretty solid just because I see back here in May, a little bit here, a little bit there. You don't have to get as aggressive. And once again, it's one of those things, if you get more aggressive, just give yourself a little bit more time. But I do like it, definitely. Let me put it down on the bear. It's got to break first, though. And you're right, it's got to break. It looks like it could, because it's in kind of a small little of an uptrend, if you guys take a look at this. It is. It is. So, I mean, maybe you're thinking if it breaks 95 to shoot 90. I'll put it down. All right. James, ALLY. Waiting for confirmation target. Targeting of 31 or 32. Oh. All right. I figure by now I'd just automatically zoom in. I wish I could set my chart to default, but I can't with this program. 31, 32. 32 is good. Right? 32 is good. 31, I imagine if it slips, it'll easily get there. But he does need confirmation. Cool crossover. It'd be neat for this to break that 34 level. You're right. Breaks that 34 level. Go ahead and target that. That's another bear possibility. LLY. And this one's not as bullish as BX, right? Because this actually came from this area, so it's only poked its head up once. Where BX kind of had its own, kind of an uptrend before it started to roll. So this one might have a higher probability, if anything. Thanks, James. All right. XLV. Somebody's doing the healthcare sector. Dan. Right at the 50-day, looking at, let me zoom in. Yep, it is right at the 50-day. Looking at a butterfly to hold, stall at that 129.5 range. Ooh, let's take a look at it. You didn't get too specific, did you, at 129.5? You could have given yourself a wider range. I teased Dan. No, this is fine. Okay, September 2nd. Okay, so you're only going a week and a half. Okay, week and a half there. 130.5, 129.5, 128.5. So $2. $2. Looks like that. He's got. Ooh, good risk reward on that. Okay, let me draw these lines if I can. 29.5 is going to be really ugly at about there. And 128.5 is going to be really ugly about. That's as good as I can get right there. Okay, something tight, something quick. I'm fine with that. I'm fine with that. Neat. I'm going to put XLV down as sideways, as that is truly sideways. When you zoom on this, guys, you can get as wide. You can get a little tighter with that. You can get a little wider if you wanted to. But the risk reward Dan has seems to be really nice. So awesome. Cool. Hey, there's a lot of traders like me that like a higher reward to risk with lower probability. I'm fine with that. And I'm not saying that's low probability. I'm just saying that that's how it works. Is it too late to go short ELAN? All right, Daryl, let's find out. Ooh, I really, really want to, don't we? Yes, I'm with you. I'd love to. You're a little extended, yes. Yeah. And what's tough about this is it's just going to bounce. And what the bounce is usually caused by is somebody covering their short and making a ton of money. So the only way to get out of a short position is to buy it back, right? So it will bounce. Now, since you have brought this up, honestly, keep it on your watch list. Watch for it to bounce to certain areas, and this is what's really cool. So let's draw some of these. Here's obvious. I don't know if it's going to make it there. And if you're a Fibonacci guy, if you're a Fibonacci snapper, start at this point here, this top, and snap down to where it's at right here, and it'll give you a range. 38%, or I think it's 61.8%, 38.5, whatever. You give all these percentages, and you could wait for it to, or even 50%, come back to one of these lines. And once it sets like a bear rally with a hammer candle and confirms down the downside, then boom, right there, you get the next move to the downside. So no, keep it on your watch list for your bears. Right now you're chasing it. Wait for it to have a dead, they called it a dead cap bounce. And what that means is it's just a bear rally on people who are short and have to buy it back to make money. And what's cool about this is I love the volume. Look at that volume behind there. Lots of activity to the downside. So early, and when you say late, I'm going to say it's early because there's an opportunity here to the bear side. Just wait for it to bounce. Thanks for sharing. I'm going to write that down. It's a good bear. ELAN. All right. All right. Hey, Sebastian, what's up? Sebastian's got the minis. Gosh, I always pull the numbers from the minis, and I rarely chart it. Why is that? Bull pullback on the daily. Absolutely. Absolutely. That is a bull pullback. Let me draw the lines. Wow, we can draw this all the way back, but I'm just going to do it back to here to early June. Confirmed. It was confirmed earlier today. It might continue higher, but I do like that. Just shy of that, just below that 20-day moving average. For sure. For sure. Excellent. Awesome. Thanks. Okay, moving on. Dan's got target. Looking for a bearish breakdown below 160. No, let's find it. This is similar to all those some that we have, and I am very glass half empty. Obviously, but it has that same silly uptrend. Now it looks like it's about to break it, and I have to agree with Dan. If it does break that 160, we're singing a different tune. It does have the 50-day moving average to maybe help it, but if it breaks it with any sort of momentum, and what's a bummer about Friday to Monday is the gap. I can't stand it. We always have these. I know the markets are going to turn. They're due for a correction, and it happens in a gap, and we really just can't do much with it. So just keep an eye on this, and if it starts to roll, yeah, it's got another support here at 150. Right? You can see there's a gap in this area. I'll just make a nasty line. But it may be bouncing today. You just wait. Yeah, keep it on your watch list. Excellent. All right. Mesbin, what you got? XLF. Let's take a look at XLF, the financials. We already looked at healthcare. Look at the financials. They're holding in. Support right now at about 34 level. Do you think XLF will make lower lows or higher highs? Oh, no trade question. Just wondering in general. Okay. It could go either way, and that's so tough. I mean, when I started the class today, the first slide I said or was it the last slide? I don't know. Whatever. But we need to kind of hold these levels. This This is huge. This is a pivotal level for not only the markets but a lot of sectors. Because if we bounce from here, absolutely, we have an absolute confirmation of this is head and shoulders weird. Where maybe he's got scoliosis bottom, whatever, but it is definitely moving higher, and it comes up. It hits Jeez, sorry about that line. It hits resistance, pulls back, hits support, moves higher. I mean, absolutely. I'll tell you in a week, but it's at a really pivotal point because if it can't, I mean, we've looked at a few trades, BX, ALLY, a couple of bears that are, well, maybe not this bullish, but are in the same situation. If they fail, they're gone. They're gone. So it's great. No, this is it just depends on what we do for the rest of this week. That's my opinion. But thanks for the question, Mesbin. Awesome. Okay. Let's move on. NTR. Brian's got a trade here. September, week and a half from now, first week of September 2nd. So week and a half, 91, 97, 103. Let's take a look at it. Ooh, okay. 97 mid, 94 right where it's at. 91, 103. I like. Okay. Yes. Let me draw a line from back here. This is a true butterfly. Just, hey, we had this nice ascending triangle pattern. It busted out. Looks like the belief, Brian, I don't want to put words in your mouth, but is that it's going to either pull back and come back or get above it and pull back. But the idea is to stick right around that 97 number. Completely fine with that. Let me write that down on sideways, NTR. And it's only a week and a half, folks. Week and a half is such a fun wheelhouse, at least for me. Even though I'm wrong sometimes, I feel better about a week and a half. I don't know why. Is that talk about falling into habits. All right, GTLB. Hey, Joel. Let's do this. Okay. Diagonal, still the 80 call for September. Buy October 65. Only has monthly expiration, so he's going to slow play this. But this pattern's neat. That's cool. That's cool. And he's going to go way out. And what's cool about this, it's basically somebody who just wants to buy the calls. It's good, Joel. I like it. Let me draw some lines here. Above support. Nice trend. Boy, this thing rarely dips too far below its 20-day moving average. Last couple of days look good. A little worried about this, but it could just be the fact that the markets are going the other direction. Neat. Let me write that down. Yeah, okay. Yep. The 85.9. Confirming up to date, Dan. Okay, I'll do it because this is entertaining. BBBY. I love the meme stocks. And I always tell I've got a lot of friends that will text me. Disclaimer, friends that I sport bet with. So like if we're betting on football or basketball, these are the same guys that say, hey, what do you think about Bed Bath & Beyond? And my answer is, somebody made a mess of money here, and this is you paying him. Right there. That's it. That's all a meme stock is. Somebody made $58 million, and I think there was an article on it, and you didn't. So, I love how you brought that up, Dan, just for fun. I know I'm teasing. But it's one of these things where if you're in it, you're in it. You don't know what happened. By the time you get the outer execution, it's right back down to where it was. But these are things you really can't catch. They're fun to watch, and I love to bring them up. Like, yeah, the meme stocks are back. They're great. And, here's another one that's amazing. AMC. Oh, no, they're filing for bankruptcy. Interesting. Shocker. Yeah, because people have been going to movie theaters in droves over 2020, 2021. But for some reason, I guess I can go back. This stock was worth $70 a share. So, anyways, fun. Thanks for that, Deb. Joe's got SIGA. by the way, I'm not picking on anybody, and I feel bad for them as much as the next person, but it is kind of silly to watch, right? Woo! Okay, biotech going off the charts. Bear pullback or bull pullback, yeah. Or is it bull bear? Need some more September 2025 bull call. Yes. Yep. Yep. Just confirm. It'd be nice to. It would look great today, right? It looked like it was about to trigger above the previous day's high, and it still has a chance. And I like where it's at. Yeah, wait for that confirmation. And he's looking at a 2025 bull call for sure. Easy. Write that one down. Okay. Yeah, sorry, Joe. I saw that you corrected it. I figured it out. All right. Okay, cool. Hey, we made it. We made it through the list. Let me type it in real quick. You guys can go ahead and stare at what's going on since I've been blabbling. Boy, it looked like we were really taking off, and looks like we're giving some back here towards the mid part of the day, which is fine. Oh, it happens. But yeah, these markets, right? In my personal opinion, folks, they have to hold here. They really do. If they don't, then I think we can say goodbye to that nice bull move that we've seen over the last month or so. I think that might be stalled out, and I have to agree exactly what Corey was saying. Take a look at the longer term, trade the markets in front of you. It was really cool because I'm not an Elliott Wave guy, but it was neat that he broke that down for us yesterday. I thought that was really cool. So it's one of those things where whatever you're looking at, whatever technicals you're looking at, everybody and their dog knows that the markets are due for corrective action. So that's might be what's happening. ELAN. Oh, guys, by the way, these are great trades today, so thanks. Let me share it with you. Okay, cool. So this is what we got, and they're awesome. These are really cool. All of them are feasible. All of them are great. If we get a market that's going to consolidate, I truly want to see us kind of stay there. It was interesting that I know I've been beating on Corey today, but he's great. So Corey was hoping for a little bit move to the upside because he wants to get more bearish, which, once again, if you believe that, take a look to the right there. There's some really good bears that need to break down, and they could be something to look forward to. All right, great class today, guys. Thank you so much for your participation. If you got any questions, please feel free to reach out, and we'll talk to you next time. Bye, guys.